Yeah, good afternoon or hello everyone. Welcome to this video. Yeah, we're going to be talking about risk management. This aspect is very, very important. We're not going to be doing anything on the chat, but it is best I make use of the charts since that is what we'll be using even on every other aspect. Risk management, psychology, and trading plan. Um, Definitely, every single one of us taking this course have to practice backtest the course first before you delve into the market. And unless you have prior knowledge, I don't advise you enter the market straight up without having to practice this course. That is first of all. Now, risk management. Now, um, every single one of you have to like come to the realization that trading is a very rewarding profession, but it can be it's a lonely profession, and it requires patience in every aspect, both in the trading as well as how how far or how well you get over the years. Some may be privileged to, make it almost immediately, while some it takes a lot of dedication, and some maybe due to improper knowledge, they don't get it right for so long, and then they'll be like they've been in the game for so long, but they still haven't been profitable. Anyways, that aside, so um, I'm going to be discussing about like I'll be combining everything together. So not just one, okay, this, because they're all interwoven. All right now. So the thing is that risk management is very, 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 very important. Very important. And what does risk management means? Like how you are able to manage your trade. Should you open multiple trades? How much are you willing to lose? That is the risk management I'm talking about. How much you're actually willing to lose on that trade. That is why it is important that you wait for setups to play out, and then this gives you room for a tighter stop loss. For instance, now we all know that the indexes is very, very synthetic indices is very volatile, and all the financial market. I already told you that this concept works on every other market. So, but especially the indices, it's very, very volatile, and that is why you have different lot sizes for different indexes. For the 75 index now, the least lot size you can use is 0.001, and that gives around $0.01 per pip. And I told you, if you want to calculate your pip, you divide it by 10 to assuming you have like a 10,000 points. So divided by 10, um, that is 1,000 pip times 0.01, that is $10. So it means you're risking $10. So, but you can definitely have a tighter stop loss with this concept if you know what you are doing and if you master it and if you backtest it. Now, one thing to understand or to note is that trading is not a get rich quick scheme. It is not a get rich quick scheme. So, and what I need you guys to understand is that if while trading, especially people will say, learn before you earn. But if you are learning before you earn, it's important that you have other things doing. Have other things doing, like something else that's bringing in money. Although I advise that okay, should be something line of trading, but not everyone started with trading. You all had stuff you were doing or something. So while you are learning, please earn, because That is my own mantra, because how will you be learning without earning? When it's time to fund your account, how do you fund your account without having anything doing? It may not be trading, or it may not be anything. If you need money to fund the account, and then you need money to fund the account again, like keep on funding. So that is just the logic. You don't expect that you're going to be using $10 or $1 just for a start. You may get thrown away or thrown out of the market. So you need to get something doing, and it's not a get rich quick scheme. Another thing is that you may you need to like take out of the market as well as save while you are earning, because for instance, you may be in a trade, and then also you may be in a trade, and maybe you use the wrong lot size, or maybe before now, for instance, sometimes you are maybe trading another index, and then maybe that index, the least lot size on it is like 0.5. Your broker is not going to erase the 0.5 when you want to open maybe a week 75 trade, and you're saying that you're using the same lot size. Your account can just get blown away within 1 minute. That's just the truth. That's happened to me, and I pray it doesn't happen to you. So you need to be conscious, and then you need to have extra money. Anything is possible. So also endeavor to demo trade before you already made mention of that. Endeavor to demo trade before you go live into it, and ensure that you have a strategy that works, and then you are good to go. So also, why I already said that if you are taking this course, you really need to be able to implement what you've been taught. You need to be able to implement what you've been taught. So you need to be able to implement what you've been taught. Um, Now also, while you are risking, your risk, I already told you, is your stop loss pips amount. What this mean? It should be money you are willing to lose. It should be money that you are willing to lose. The reason being that you don't expect to risk the whole of your account trading. The reason why it should be money you're willing to lose is that, for instance, you go and you risk it all, maybe like the way South African traders do. You risk it all, and then maybe, or you're risking like 50%, and then you lost 50%. Maybe that's the money you have in your whole life. You're risking 50% of your money, and then you find out that maybe the trade goes against you or something, or maybe it's retracing back, and then you can't take it, you close in loss before it moves in your direction. So you need to be able to let your trade run, and then that is why the essence of having a tighter stop loss, because once you are is an amount you are willing to risk, you don't worry about what is happening there. You just worry, okay, after the trade, maybe you lost on that trade, it was an amount you're willing to lose. You are able to back test without your psychology being affected, that the amount I lost today, or you not being able to do anything. You're able to backtest and see that, oh, this was why it happened, this was why it did this was why it did that, and so many other stuff like that. So all these things have to be put into consideration. Don't risk more than you can afford to lose. Then also, you need to keep on learning. There's nobody that's an island of knowledge, and where you learn is on the market. You need to understand that as it is now, it is not everything here. It's not everything that I would have told you. There are some, even when you take courses, like maybe you go to take ICT courses or other top traders course, and you notice that, okay, they say everything, like almost everything. At the end of the day, once you are done, it is still what you've deduced by yourself through what they've taught you that you are still going to use. You cannot try to imitate anybody. You have to be yourself in the market. So that is one thing you need to understand. Also, um, like learn to like stay out of the market um when maybe after a loss, or when you're not in a good mood, or you just made a loss and then you want to go back into the market and revenge trade or something. Please just leave that out of it, and just, if it is a week you're going to take off, and then maybe probably can just be demo trading that time, remember that it is real money you're risking. And then we all know how the dollar rate currently is. That naira we converted to dollar to trade, we cannot afford to lose too much of it. It's big money these days. So please, you need to be cautious in your approach. And once you start to get trading, please don't be overconfident. Always realize that it's possible that you get stopped out due to manipulations or anything. No trade is sure. Any scenario can play out. We just try as much as possible to analyze the market probabilities or possibilities, by thereby when we minimize our risk. So what we are doing is that we are the probabilities, the probability that we are deciding upon, we are trying as much as possible to minimize the loss of the probability that, okay, this is what we want, we can want it to buy. So if you're having a tight stop loss below, then we believe that, okay, if it doesn't go our way, then we can afford to lose this money. Don't be overconfident that, oh, it's going to do this, it's surely going to get there, it's surely going to do this. Also, always take profit. Like, always take profit. There are so many invalidation points on the chart, lower time frames and the likes, where price is going to retrace. You can as well, especially those that have a small account, or um can't hold retracement or something. So it is best for you to check those invalidation point at the lower time frame. Take your profit there. If you want to re-enter at the retracement, which you actually analyzed prior to when price get to the invalidation point, you can enter again, or you stay out of the market with tighter stop loss, or you stay out of the market. Now, also, when you're starting out, you would see, or you would have noticed, different traders post profit. Oh, I made this today, I made this. Crypto traders to post, futures, crypto future traders to post 700 PNL, 400 PNL, blah blah blah. Forex to post their winnings and all, and then you're all like, oh, well, how is this, how is that, how is that? So please just don't think too much about that. Focus. You're just on your way, and you've taken the right step already in starting out this trade and trading as a profession. So you just need to focus on the process. The process takes time. Time is essential. So it now depends on the hard work you put into it, that will determine what and how far and how well you are going to go in this profession or in this market. So all right, okay. Now to the trading plan, everything you've been taught here now, the whole area of value, the price ranges and other blocks, imbalance, blah, blah, and so many. So, and what have you? There's need for you to stick to this. Definitely, after watching this course, you may deduce some other things in which you see by yourself on the chart. So, and then structure too is very important. So you need to follow this. Wait for price to get to you. Wait for your analysis to play out. Wait for structure shifts before you place trades, and endeavor to take profits. If that's why you should have a tight stop loss. Or if you can implement what is taught in this course, you're definitely going to have a tight stop loss. And this permits you to, actually, it's actually boosts your psychology, because you know that, okay, you're just risking maybe $2 to make $30 now. And oh, yes, you can afford to lose $2. Then you check what invalidated this trade. So definitely this can actually like help you in another time when you see something like that on the chart. Then definitely don't be too greedy, in the sense, don't try, using $1 to make $1,000. Maybe you saw someone that did it or something. They should just take them until the process. With time, you will definitely get there. Also, eliminate greed away from your mind, like greed. Don't be greedy. Don't be greedy. Whatever profit you see, if it's $10, if it's $20, it's just take it and leave, and maybe go and make some other setups for the day. Um, then I already talked about patience. So um take emotions out of your trading. That is what the importance of having a tight stop loss and risking the amount you are willing to lose. So sorry. Then also you should as well have a trading journal where okay you get like how much you made, how much you lost, or win percentage, or like a book before you actually like learn. So like this is actually applicable in every single market. It doesn't have to mean that this with this strategy you are good to go with any form of market, any form, you are good to go. The only thing, the only difference between this market and the other market is that you need to check fundamentals. There's so many other factors in which you need to check. So if like for the forex now, if you want to analyze any dollar pair, you need to check the US index, bond yield, and some other stuff. And the crypto now, you need to check what is going on fundamentally on Twitter and yeah, Twitter majorly and what have you. So that's just different between these two. Even these two is a market that is manipulated. So that is why you just need to have a tighter stop loss and then implement everything you've been taught in your own way. You don't need to copy. With time spent on the chart, you actually understand every single thing you've been taught. So this is my input on your psychology. Then and then work with what you have. If it is $20, you're able to work with that. Don't rush the process. All right, so we've come to the end of this video. So as time progresses, I'll be adding to or updating the library of this course. So please, uh, I'll see you on the next video.